Today we are talking about how Tesla stock is poised for more growth. For more stock updates, remember to press the like button, subscribe if you are new, and now let's get right into the video. So Tesla's had a bit of a rough start this year. Their shares have dropped by 20% since the beginning of the year. This dip is mainly due to a tough business environment and stiffer competition in the electric vehicle world. But don't freak out just yet. They've managed to claw back some of those losses already. As a long-term investor, I think these short-term setbacks are way overblown. I've got two major trends to talk about that I believe will drive Tesla's value up in the long run. First up, let's talk about their electric vehicle business and how they're stacking up against Chinese competitors. In April, we started seeing some growth in the electric vehicle market after a slump, but here's the kicker. Tesla's shipments actually dropped during that period. To tackle this, Tesla cut prices, but this move hasn't boosted their revenue as much as they hoped. Instead, it's hit its margins, with operating margins falling to 5.5% in the first quarter of 2024 from 11.4% last year. Despite these hiccups, I believe Tesla is going to maintain a strong market share in China because their quality is top-notch. Sure, Chinese automakers offer good value, but Tesla's tech like full self-driving and other autonomous features gives them a serious edge. Even though we're not sure when these advancements will fully roll out, I'm confident they'll boost Tesla's profits and solidify its position against Chinese rivals. Now, Chinese original equipment manufacturers have an advantage in their home turf, but outside of China, tariffs level the playing field. Plus, traditional automakers like Ford, which is cutting back on electric vehicle spending due to the current economic climate, open up more opportunities for Tesla, especially in Western markets. Now let's talk about the second key factor. Tesla makes some killer energy storage solutions aimed at boosting sustainable energy. They've got the Powerwall for homes, the Powerpack for businesses, and the Megapack for huge utility projects. These products store energy, stabilize the grid, and support the big renewable energy projects. Tesla's edge here is its ability to design and make its own batteries using the same low-cost lithium iron phosphate batteries as its electric vehicles. This gives them a huge leg up on the competition. Tesla's energy storage business is growing fast, in line with the global shift towards renewable energy. By the end of last year, they had deployed 14.7 gigawatt hours of energy storage. Installations in 2023 more than doubled those in 2022, jumping by 125%. Profits in this division nearly quadrupled, and demand is now outpacing their manufacturing capacity. This booming demand is changing Tesla's revenue game. Right now, Tesla Energy makes up only 9.4% of their total revenue, but with year-over-year growth averaging 62% each quarter since the first quarter of 2023, this segment could overtake their electric vehicle business in terms of revenue in the next few years. Tesla holds about 30% of the global battery energy storage system market, and this is expected to grow. Elon Musk aims to capture 15% of the total energy market with Megapacks. Even if they only grab 5%, that could mean $4.2 trillion in revenue down the line. If Tesla can secure 15% of a potential $600 billion battery storage market, sales from this business could hit $90 billion, nearly matching Tesla's total revenue from last year. Based on these numbers, their energy business could be worth $120 billion, which is a huge chunk of Tesla's current market cap and isn't yet priced into their valuation. Now let's get into Tesla's financials and how they performed in the first quarter of 2024, along with what I expect moving forward, considering these key trends and growth opportunities. In 2023, Tesla saw significant growth. Total revenue hit $96.8 billion, up 19% from $81.5 billion in 2022. The automotive segment drove most of this growth, pulling in $82.4 billion, up 15% year over year, thanks to more deliveries of the Model 3 and Model Y. The Model Y even became the best-selling vehicle worldwide in 2023. The energy generation and storage segment also saw a big boost, with revenue up 54% to $6 billion due to record deployments of 14.7 gigawatt hours of energy storage solutions like the Megapack. However, Tesla faced some bumps in the first quarter of 2024. They reported total revenue of $21.3 billion, down 9% from $23.3 billion the previous year. This drop was mainly due to a 13% decrease in automotive sales, which fell to $16.5 billion because of a 9% drop in vehicle deliveries and a lower average selling price as they matched Chinese competitors' pricing. Production adjustments like ramping up the updated Model 3 at the Fremont factory and issues at Gigafactory Berlin also played a role in the delivery decline. On the bright side, Tesla's energy generation and storage segment continued to grow, with revenue up 7% year over year to $1.64 billion, driven by record energy storage deployments of 4.1 gigawatt hours. This steady growth shows strong market demand for their energy solutions and highlights the segment's increasing contribution to overall revenue. Looking ahead, Tesla's outlook is strong, bolstered by strategic investments and tech advancements. They plan to ramp up Cybertruck production and expand their next-gen vehicle platform. Cybertruck production and deliveries should increase throughout the year, despite initial manufacturing challenges. In the energy segment, Tesla aims to continue growing its energy storage deployments, leveraging its 40-gigawatt-hour Megafactory in Lathrop, California to meet rising demand. They expect the growth rate of energy storage deployments and revenue to outpace that of the automotive business in 2024, underscoring the importance of this segment. On the cash flow front, Tesla had a strong year in 2023, with free cash flow reaching $4.4 billion despite significant capital expenditures of $8.9 billion, up 24% from 2022. These investments went towards expanding production capacity, enhancing artificial intelligence infrastructure, and developing new products. However, in the first quarter of 2024, Tesla reported a negative free cash flow of $2.5 billion due to ongoing high capital expenditures and increased inventory levels. Despite this, Tesla benefits from strong liquidity, with nearly $27 billion in cash and investments as of the end of the first quarter. This liquidity ensures Tesla can fund its global expansion and navigate uncertain economic conditions, despite expectations of lower free cash flow over the next 2 years. Tesla's capital expenditures are expected to exceed $10 billion in 2024 to support production ramp-ups and significant investments in autonomous driving and next-generation vehicles. Earnings before interest, taxes, depreciation, and amortization are projected to rise from $14.2 billion in the first 9 months of 2024 to $55 billion by 2028, driven by growing automotive revenue and rapid expansion of the energy storage segment. Free cash flow is expected to grow from $8.4 billion to $31.5 billion over the same period, highlighting Tesla's strong cash generation capability even with substantial capital expenditures. Capital expenditures are projected to increase from $6.5 billion to $15.3 billion, yet the company is still expected to generate over $31.5 billion in cash by 2028. With a robust liquidity position of nearly $27 billion in cash, as of the first quarter, Tesla is well prepared for global expansion and significant capital expenditures, particularly in autonomous driving and next-gen vehicles. These are crucial for gaining a competitive edge over Chinese competitors. The energy storage segment is vital for Tesla's future, with growing deployments driving significant revenue growth. Strategic investments and technological advancements, like full self-driving, further strengthen Tesla's competitive position and profitability. If we extend the growth exit to 10 years, the fair value could rise to an 80% premium over current market levels, showcasing the long-term growth potential and strategic importance of Tesla's energy storage business. So despite what some investors might think, Tesla looks undervalued and ready for another big growth phase. Their focus on advancing full self-driving and autonomous driving tech gives them a unique edge in the crowded electric vehicle market, especially against Chinese competitors. Plus, the rapid growth of their energy storage business offers huge revenue opportunities that the market hasn't fully recognized yet. With strong financial health and strategic investments in key growth areas, Tesla is poised to capture long-term value and solidify its leadership in the sustainable energy and automotive sectors. For more updates, remember to press the like button, subscribe if you are new, and I will see you in the next video.